In today's video, we're going to take a look at the S&P 500 along with the Qs side by side with VGT and VOO for those of you that like the Vanguard funds to try and draw some levels of where we think this selling activity, this volatility, is likely to stop, take a little bit of a breather, and find some buyers. My goal with this video is to not only share some key levels, but also give an idea around how to take advantage of this volatility. Let's start with the S&P 500 first. Now, zooming out, the S&P 500, with this largest swing that we still have active, just tagged its 1618 before we started to see the sell-off. 1618 is typically where we start to see exhaustion in terms of existing trends, but it's also not uncommon to see a second or maybe even a third test of that 1618 level before we ultimately start to see that sell-off. Now, in our current action on that weekly chart, it feels like these weeks have just been going straight down, two back-to-back fairly red weeks. The first set of levels I had stopped near the 550 mark, and we've since splashed straight through them. The next set of levels that I have right down below us is at 534.41. Seems like we're fairly close to that, so I'll call that maybe a natural stopping point for at least this week's activity before we see a little bit of pause. Now, after that, I think personally that it wouldn't be surprising to see a little bit of a bounce before we then start to gravitate towards the next level. I think we're likely to see a little bit of chop to a slightly deeper correction here, and that 1272 overlaps really nicely with another fib level. That's near the 515 mark, but to me it seems unlikely that we shoot straight down. Instead, we tag this 534 before seeing a little bit of a bounce, and with that bounce next week, we can then assess what the strength was in that. Now we contrast this with the Qs, and the Qs look very interesting right now. The Qs have pulled back into their 3 fib levels that I have, and if we switch to VGT where I drew some more levels, you can take a look at some more further downside targets. In VGT, we had the first set of levels near 570, broken through those. Second set of levels near 560, saw that initial bounce, and today we started to break down below, tagging 550. 550 was nearly a perfect pin, and in fact, if you want to see perfect, take a look at VOO. VOO today tagged its Fibonacci level literally to a penny. The low, 493.92, the actual level, 493.92. I thought that was fairly spooky. If I zoom in, you can see how price reacted at that 493.92 level. Now, with all of this volatility, the question is, how do you take advantage of it? If you're a long-only trader, or you're looking to build a larger position in your IRA, your Roth account, something of that sort, I think using the bottom of the volatility box clouds, the daily volatility box clouds, is a very easy way to try and time your entry for the long side position, to slowly keep accumulating more and more. You'll see if I load in a little bit more activity here, how these daily levels have acted in that past 5 days worth of volatility. This is Thursday's activity from last week where we tagged the lower long side levels. Then this is from Wednesday, just yesterday, where we had a nice little bounce from the conservative levels. And we had that rally to start off the morning. And today, right into the close, we tagged the long side levels one more time. Now, the real trade for those of you that like to take advantage of day trading volatility today in the S&P was the short side setup when price rallied into our daily volatility box models. This was true in all of the index markets. This is SPY. Take a look at SPY here where you can see price breaches our volatility box model clouds. We start to see the edge signal confirmations telling you you're officially now in overbought territory. And finally, you see that pink dot, which is simply the 3 EMA crossing below the 8, telling you momentum is shifting to the downside. Really no looking back after that. A massive puke into the close. Take a look at the Qs, and you'll find something similar, both from the long side setups here. We had yesterday's long side breach. We didn't get that last week long side breach that we saw in the S&P, but today into the close, we did fall straight back into key fib levels, along with present that short side opportunity for those of you that are day traders. If you take a look at this with, say, VGT, VOO, you can do the same thing here, see the clouds inside of that particular market, to gauge the exact price level in which you'd like to get short or long if you're a long-only trader. So across the board here, I think this volatility is offering some really nice setups here, both for day trading along with just swing trading and building up that larger position and maybe your retirement accounts, maybe you've been sitting on the sidelines for some time, waiting for the pullback. Well, hopefully, these levels give you a way to create some sort of a structured plan for yourself where you'd like to slowly accumulate on the way down. I hope you found this video useful for all of you looking to take advantage of this recent volatility in the broader index markets. Take care, everyone. Good luck trading, and I'll see you in our next update.